Hello and welcome. It's exciting to have you here in this semi-training. This training is being provided to go in addition to the template we have in our website, Yeto and yetoadvisory.com, to help you navigate your accounting system. So a quick disclaimer, this training is going to work best for individuals who have minimally an understanding of accounting. So your basics, debits and credit, financial statements, balance sheet, income statement, and so forth. So if you have zero knowledge of accounting, I would recommend you before watching this training and following along to read a little bit, just a quick Google search about what accounting is, what accounting help you accomplish, and so forth. But for those small businesses or startup founders who want to go with a do-it-yourself approach with their accounting, because maybe their accounting needs are not as complex and they are not at a stage where they can maybe pay for QuickBooks Online or Xero or other software out there. So Excel can work really great for you, or in my case, Google Sheets can work really well for you. So the purpose of this training is to help you get a general idea with your bookkeeping, how to capture the accounting information, how it's processed, and the output from that accounting information. So I'll share with you some key tips that I use with other very simple accounting with very simple clients that have accounting needs that can be done very quickly using Excel and Google Sheets. So we'll look into things like the chart of account, the entries in your accounting system, and how they become either part of the balance sheet or income statement. Okay, so this is gonna be a full demonstration, so bear with me, follow with me. If you have the spreadsheet downloaded, it's gonna even help you much better. So let's start with the chart of account. Right, the chart of accounts basically is the structure, the backbone of your accounting system. So it shows you the list, the description of all of your accounts in your accounting system. Right, so as you can see, we start with current assets and then non-current asset or long-term assets, and then we jump to current liabilities. Right, from current liabilities we move to non-current liabilities, and then the equity side of our accounting system, and then the income statement account. So just a quick tip, right? So all the balance sheet accounts, from the current asset to non-current asset to current liabilities to non-current liabilities and equity, these are permanent accounts. Usually they do not get close to zero at the end of the year or of the accounting period. So you roll this account to the next accounting period. However, the income statement accounts, from revenues to cost of goods sold or expenses, all of these accounts get zeroed at the end of each accounting period, right? So as I will show you with a fictitious example of someone starting a company from scratch, right? So this is our chart of accounts, right? You can tailor this if you understand a little bit of accounting. You can add the accounts as appropriate to your accounting needs. So let's look into I skipped the journal entries and moved directly to the general ledger, just to show you how in accounting this actually works, right? So let's change the date for some hypothetical scenario. I'm gonna zoom out a little bit here. So today is May 3rd, 2021. So let's say in May you decided to start your business account and you contributed about $5,000 to start your business. So you create deposit to bank to start the business, right? And you deposited about $5,000. So you'll see that column. That column is basically the debits and credit have to come down to zero. So if it has a balance above zero, it should tell you that there is something that you need to look at, right? So since we made that entry in our books, right, the other account that gets affected because we contributed is going to be the contributions account. So the owner contribution to start the business, right? So we're gonna, because it's a credit balance, I am entering it as a negative. So you see automatically here in our column balance, it comes down to zero. So, and automatically this updates all the information. When we go to our general ledger balance account, it shows us this tab doesn't need to be changed or anything. It automatically populates based on months and based on the balance in each account. So it's pulling the information from the prior tab, general ledger, and here it's giving us the balances. So cash as a balance of 5,000, and then if we go down here, we'll see the contribution, which is part of the owner's equity part in the balance sheet with a balance of 5,000 as well. So here we can see everything in our balance sheet because the transaction affects only balance sheet account. So you see the owner capital 5,000 and cash contributed 5,000, and therefore our total assets equal total liabilities and owner's equity. So everything is correct, right? So let's go back to our entries. So let's say 2 days later you decide to hire a lawyer to set up your accounting, your company, and to file certain documents with the state and to write your bylaws and so forth. So what we're gonna do is to reduce the amount, right? Fees paid to lawyer. Oh, okay, to lawyers. So you pay the lawyers, the money is getting out of cash, right? Let's say you pay the lawyers $500, and you also have to again, the column balance is gonna tell you whether or not everything is correct, right? So you paid for professional fees. So let's see if we can find professional fees, and there we have. So we can just track these here, and because expenses have a natural debit balance, we're going to include 500 here, and then the error goes away, right? So I am going to include the date here as well. So let's see what happens in our general document, right? So the cash balance is reduced, right? And then our contribution is to 500 as it was entered, but we have a professional fees of $500. So in the balance sheet, let's look into the income statement. Because we incurred expenses, we should have a professional fees of $500 that was incurred. But also what we have is, because we have zero revenue, our net income at the moment is a negative $500, which flows into our retained earnings, making our total assets and total liabilities and capital to be exactly the same. So cash decreased, equity also decreased. So we're following, right? So awesome. So let's go and make an entry on, let's say on the 10th, we had a sales of our first goods, right? Let's just use an example of a service business, and for the sake of this example, we're not going to think about the sales tax with the products, right? So as a service business, you develop websites for clients, right? And you received commission fees for website development. Let's just short it there. So you receive the revenues of 10,000 to develop the website, and that 10,000 is going to go to your cash, right? So $10,000 goes to the cash. That's gonna be a positive sign. So again, the column balance is neat, right? So let's see how that affects our general ledger account balances, right? So the cash balance increases, obviously, because we received cash. And what else increases? Revenues, because it's a credit balance. As per our system here, we enter it as a negative. However, when we go, and also when we go to income statement, we see revenues of 10,000 as received by the client, but we don't have cost of goods sold here because this is a service business, right? It's not like a restaurant or a manufacturing company and so forth. But because we incurred a $500 with the professional fees, we have our net income in amount of $9,500. And let's see how that impacts our balance sheet. So our balance sheet increases by a little bit more, 1,400, 500, that is in cash, and total liabilities and owner's capital also increases because of the profit we generated. So this is an example, a summary of how your accounting system works and it functions. So in a nutshell, what we saw is some of the very basic parts of your accounting system, from the chart of accounts, the inputs of data, how it's processed, and the document, the final reports that is produced. And based on your balance sheet, you can see a picture of how your company is performing, right? At this time, in this specific time, how is your company looking like? Do you have enough cash or not? Do you have enough asset to support your operations or not? Do you have liabilities or not? Do you have long-term debt? How is that impacting your business? And in the income statement side, we have an entire picture of how your business performance looks like. Are you generating revenues or not? What areas have the largest expenses and why, right? So the bottom line with the accounting information is to produce the accounting system is to produce information that can help you make decisions that benefit and advance your business. Okay, so if you want to learn a little bit more about accounting, or if you want to hire an accountant, a bookkeeper, a professional who will not only enter your data but will educate you, that will train you, that will advise you in regards to your business, in different areas, accounting, finance, even your personal financial planning strategy. So we have this company, and you can find our website, yetoadvisory.com. We are Yeto Accounting and Tax LLC, and I am the founder, Lunta Dila Cesar Paulo. And we provide services to individuals and families, to startup founders, to small businesses, and a little bit of services to mid-market. So as a small business or startup, if you visit our website, you will find a little bit more information on what we provide, how we help small businesses, and how we help you achieve your dream. So I hope this was helpful to you. Please do not hesitate to contact us. Our phone numbers are available and our website is up there. Feel free to reach us out, and we'll be more than glad to work with you. So I hope this was helpful to you, and see you soon.